Welcome back to the Steady Trade Podcast. Got an exciting episode, one I've kind of been looking forward to doing for a while, and then we had a recent catalyst to kind of bring it to the forefront. What we're going to do today is similar to what we've done in the past. We're going to kind of recap and discuss a interview with a great trader, one of the best out there, and hopefully someday. And I think I can, if Phil's listening, I think I'm confident that someday I can get him on Steady Trade as well. But the neat thing is Phil Goedeker, longtime friend of mine. I've known him from the trading community for years. Got to meet him in person a few times. Not like super tight, but you know we are quote unquote internet friends and have chatted here and there before. And so at the end of last year, he did a yearly trading review. It's actually a twit longer post, and we'll have it in the show notes below if you want to read it. And it really was interesting. First of all, it was a great post. I think any aspiring trader should read it, especially if you're an aspiring short seller. Phil has done some amazing things shorting junk stocks, which is a lot of what Steven looks to do with his core strategy. And then the biggest reason we're recording this today is recently Phil appeared on Chat with Traders with Aaron Fifield. I hope I pronounced your last name right, Aaron. I've chatted with Aaron a few times, and, you know, chatwithtraders.com is a great podcast. I recommend it for anybody that is interested in trading or is on the journey of trading. You know, I kind of operate from a abundance mindset. A lot of people will be like, well, geez, you're building this podcast. Why would you promote another podcast? In my opinion, there's 8 billion people in the world. There's hundreds of thousands of traders. There's plenty to go around. And Chat with Traders is an amazing podcast. And I don't really necessarily consider it competition for Steady Trade because, you know, Aaron's got he more focuses on guys that are already there. You know, these are hedge fund managers. These are quants. You know, these are guys that have been making millions for years and years, which is inspirational and which is great. And that's why I recommend the podcast. But at Steady Trade, we've got kind of a little different niche. We're looking to help the new or the intermediate trader. And then hopefully someday you become one of the guests on Chat with Traders, and we have you on Steady Trade as well. So make sure to check out Chat with Traders. Make sure to check out the interview with Phil at Ozark Trades is his Twitter handle, and that's also in the title of the podcast. So what we're going to do today is actually I assigned the job to Steven, and he listened to the podcast and cut out a few clips that he thought were particularly poignant to his journey, where he is being an aspiring short seller, because Phil goes through a lot of the phases that Steven is going through now. Phil just did it 15, 20 years ago. So we're going to run through those clips and then kind of offer our commentary and how we think that maybe they would apply to our Steady Trade listeners.
Yeah, no, and just to add, probably chatwithtraders.com. It was funny, before I heard the podcast, I considered them as violent, ferocious competition. But once I listened to the podcast, I thought there was some super advice out there, which is free content. So respect to the guys for doing that. I thought it was one of the best interviews I've probably ever heard, and especially because he's an aspiring short seller. But we'll go straight into the clips. The first one up is he talks a little bit about how he got started and how he basically lost 4K and then started again and lost 4K and was trading all different patterns, which is what everybody does. But we'll jump into the clip to see how Phil put it.
And, kind of hope for the best. And at that time, again, I was just studying everything that I could. I was studying, different chart patterns, trying to find out some patterns, trying to find out what made a good setup. My sophomore year in college, I just slowly lost that money. It was $3,000, and I slowly lost that over the course of the year. Well, the very next summer, I worked again. I worked for my dad. He has a business here in Missouri, and I worked for him over the summer, and I saved up another $3,000, and I kind of did the same my junior year. I slowly kind of lost that money, just trading long, I couldn't find any consistency, but, I was still, the losses didn't scare me at all. I was so intrigued by the market. I knew there were ways to make money and ways to make big money.
Yeah, and I think that's, for me, two massively important points. One, he wasn't in it for the money. He was in fact losing money, but he was in it because of the fueled passion. Two, a lot of traders, he lost 4K. Then I think he said he lost another 4K, just trying different patterns. And
yeah, I think if I remember right, I think he repeated that cycle like 3 or 4 times.
Yeah, and this is the funny thing, because when I'm on YouTube and there's so many haters on YouTube, they're like, "Oh my God, he's not made it in 8 months. He's not made it in 9 months. He was up and now he's down $5,000." I'm like, you guys are idiots. Like, you don't realize, like, it takes years to get this. Like, people don't get that it takes years. And just because Dux and Grattani did it, and even Grattani didn't do it until it was 18, 19 months consistently, like, people don't get that it takes a couple of years minimum.
Yeah, and they don't, one of the things I like that you mentioned is, Phil went into this with a deep passion. Now, he mentions earlier in the interview that one of the biggest reasons he went into trading was, and I liked this, he said he wanted to make money fast. He didn't want a job, and he basically broke it down to it's either real estate or trading. And he says, hey, real estate, you kind of got to have money to make money, or you got to get investors, or you got to have a rich dad or something like that. And then he basically set his sights. He said, this is what I'm going to do, and I'm going to keep working and working and working. And that meant he blew up 3 or 4 times, but he never really let that affect his end goal. His goal was to learn trading. His goal was to be a full-time day trader. And just because of the fact that he didn't get it in a year or 18 months, he never, at least in the interview, he never got discouraged by that.
Yeah, and I'm pretty lucky though. I mean, I'm on StocksToTrade Pro and stuff like that, and we do the podcast. Like, I always, like, my expectations are very set, because obviously I've got people around me who are successful, and they can give me the reassurance, look, you're not, just because you haven't got it yet, you're not going to fail. And obviously I can trust you, because we speak to each other every week, twice a week. I'm like, you're not going to lie. Why would you lie? So it's, the good thing about this podcast is it's just trying to give people the reassurance, like, this isn't marketing. This isn't like bullshit. It's not lying. We're not lying. No one's lying here. It literally takes 2 years. It can take 3 years. It's not bullshit. Like, it's not just to try and get money by selling education, and people think that.
Well, and back to Phil. I mean, he may be, obviously we don't know everybody, but he may be the most successful short seller of junk, low price stocks, and it still took him, I don't remember the exact timeline, 3 or 4 years before he hit it big.
Yeah, and I just to find that the eureka moment where he found a pattern that worked. And if we just jump to the next clip, he actually explains the moment where he found the perfect pattern for himself.
In August of my senior year of college, the symbol was CAFE, C-A-F-E. The name of the company was Host America, and I can remember it like it was yesterday. They put out a press release that they were going to do some sort of business with Walmart and some sort of partnership with Walmart. The stock went from about $4 or $5 up to $15, and it's about a 2-3 day span. And I shorted it at 15. I shorted all I could. It wasn't much, maybe a couple thousand shares. And the very next day, the stock was halted, and it was halted for a month. And I was on Yahoo message boards, and I was reading all this stuff about, they're going to be bought out. And I thought, well, I'm going to be wiped out. I was scared to death. And needless to say, after a month, the stock went from 15 and it opened up at 5. So I had turned around $5,000 into approximately, maybe $15,000. So it just clicked. I mean, it opened up my eyes. And it wasn't so much the monetary gain that I was excited about. I was just excited because after 2 years, I had finally figured out something that can work, from $5,000 to $1 million in 9 months. And I thought I was on top of the world.
Yeah, again, it's just, the only thing I want to really say about that is the 2 years. He said it took him 2 years to figure out something that could work.
Yeah, and that's, And a lot of the topics of these podcasts have been me kind of, you've had some success, you've had some setbacks, and I keep trying to remind you that the best of the best, it takes years, sometimes more than 2 years that it took Phil, but you've got to try all these things. I mean, he tried going long, he tried going short, and then ultimately, once he found this junk, total hyped up stock, the big gain was where, okay, now he's recognized his target, because this, I don't remember again the exact timeline. It was probably 15 years ago, but he's still shorting the same stocks today. The stocks that go from 5 to 15 on some BS rumor. And that's the other thing that so many traders struggle with is you start out, whether you're buying breakouts, you're buying earnings winners, you're dip buying, and everybody wants to do everything. Next thing you know, I see guys, they're asking me about options. They haven't even traded for 6 months and they want to trade options, or they want to, Forex, cryptos, all this stuff, when they haven't gotten to the point where they have that one setup where they feel they can, not saying you're going to win every time, but you got to have one setup where you're like, okay, I feel good with this. I feel comfortable with this. Yeah.
And I'll never forget when Tim Sykes, I was tied up in Italy with the rope, and it was this big thing where it was like, oh, Sykes tied you up. Why did Sykes tie you up? And he was like, it's because you're over trading. And for a long time, I was like, I'm not over trading. I don't think I'm over trading at all. I was like, why is Sykes making this up? But then when I look back at it, I hadn't yet found the one pattern. And Sykes must have been like, well, why are you trading all these different patterns when you haven't even found one pattern that you got at? You need to find one pattern and just nail it. And this is kind of what has happened to Phil as well. He's been searching and searching and searching, and he's finally found this eureka pattern. I would probably recommend paper trading until you find it, because it saves you a lot of money,
Yeah, I guess it kind of depends on where you are in life too. He had the benefit of, he was a young guy. He was doing it in college and stuff like that. So, if you've got commitments, you got a mortgage, you got payments you need to make, it would probably be a little wiser to paper trade a little more. But keep in mind, you kind of talk about, educational products and stuff like that. He's doing this stuff in the late 90s. I don't even know if there were paper trading platforms. StocksToTrade has a real-time paper trading platform. I don't even know if those existed back in the early 2000s. So,
yeah. And I also just think when there's so many intricacies and variations of how a stock opens in the morning can completely determine where it goes in the afternoon. If a stock gaps down or gaps up, what sector a stock is in, how good its volume is. Like, there's so many different intricacies of even just one pattern. Then it's so much better to just focus on one pattern and learn how it reacts depending on the different variables. And people don't, they just trade blind and get blind results. And I know this, but it took us 1.5 years to learn.
Well, and we've all been there.
Yeah, I made the mistake.
I have a similar story to Phil, where I talk about when I found short selling. I was.
What was your first pattern? What was your first pattern? Because everyone has one.
Just the main one was a very similar to Phil, a stock that would just spike up on very dubious news, a ridiculous percentage, and then just started fading into the close. And a lot of guys call it. I think I co-opted this term. I didn't invent it, but it's like the high-a-day reject. The stock spikes big early, kind of goes sideways through the day, tries to spike late day, and then starts tailing off into the close. You short into that fading action, and then your stop loss is the high of the day. And it's as easy peasy as it gets, because you've got a defined stop loss, because these stocks are dubious. They're junk. We all know that. But if it's breaking the high of the day, late day, you have to get out. So as a short seller, I love having a crystal clear stop that says, hey, idiot, get out, and we know double tops, resistance, all this stuff works intraday, because you've got all the late day breakout buyers that are sitting there waiting. And if it fails to break out, they all hit the exits, the short sellers pile in, and the thing eats dirt into the close. And then a lot of what I was doing back then in the beginning, it was a lot safer to hold these things overnight back 2007, 2008, because a significant majority of the time, if they were fading into the close, they'd gap down the next morning, and you'd cover into the wash. So.
Yeah, no, it's good. And it's good that you explain the psychology of it as well, because a lot of people miss the psychology. Like, you've got to kind of guess what longs are thinking, what shorts are thinking, and then predict what you're going to do and think ahead of time. How will people react if this double tops here or if this fades?
Yeah, because everybody, well, not everybody. You've always got a certain amount of noobs. Hopefully the Steady Trade podcast can help speed up the acceleration of or the education of new traders. But everybody, whether you're long or short, if it's, today we had, it's one of my favorite short setups, and actually you shorted it today. Female Viagra. Okay.
I know.
so, and hopefully this isn't offensive or sexist in any way, but if there's ever a stock beyond obesity plays, if there's ever a stock up 80% on female Viagra news, that you can't get a better short sell opportunity.
Yeah, and it was sad, because what I'm learning, I've started thinking, what are the retailers doing and what are the big investors doing? And it felt like the retail, all of the day traders are pushing it up pre-market, getting excited.
And it was a slow day today. It was a slow day this morning, so it's like you always got to be, and this is a good tip for new traders, when you're looking at your pre-market scans, which you should be doing every day, and there's just not much going on, and then all of a sudden just one stock with pretty iffy news starts running, you got to be, now if there's all kinds of stock running, the market's booming, it's a little different. But when it's just one and you're like, wait a minute, female Viagra, you got to be real cautious chasing that stock up.
But a lot of people chased it, and there was a good 900,000 shares went off in the first couple of minutes. And I just feel like that's 900,000 retailers buying into the open, and there's a big investor dumping 900,000 shares at a very good price. And that's my take on it. I'm guessing, I don't know, but
it's another one. When you, and we'll get back to Phil, but this is a good topical, because this is, if I had to guess, I haven't talked to Phil.
I'm being cynical, by the way, but I know how these things work better these days.
No, if I had to guess, and I haven't talked to Phil in a couple of weeks, but if I had to guess, he was short the stock this morning.
Big.
So it's definitely topical, but yeah, those are, especially when you look at the chart, and we could probably even put it in the post, but bring up a long-term chart of this stock, and it is, it looked like it was going to zero tomorrow.
Be careful still, because AFMD is the biggest scar of my life. That was the worst long-term chart of all time, and it was manipulated, and it messed me up. So I'm always careful with longer-term charts these days. But the thing is, though, again, going into the next topic for Phil, you can win a lot, and then you can start thinking, you can start doing more different things. You can start being a bit more flexible, and sometimes it can burn you if the market turns. And this is Phil's next topic.
It was incredible. But, again, at that time, I had no rules. I had no money management. I was going all in on every position, no matter what. And that's how I grew it from 5,000 to $1 million. There would be no way to make that return if you're not risking everything you have. Now, so needless to say, when I graduated in May, I thought, well, hell, if I had just turned 5,000 into $1 million in 9 months, in June, July, August, I want to turn that $1 million into maybe $3 million, maybe $4 million. And that's when I'll have some big money. Well, needless to say, the market kind of turned south, and that million went down to 500,000 pretty quick.
Yeah, it's pretty humbling experience. No matter how much money you make, to lose 500 grand must make you feel sick.
Well, and half your account. I don't care if you're a new trader and you got a $5,000 account, and all of a sudden you're down to 2,500. That's a punch in the gut, But as you said, $500,000 is a lot of money.
Yeah, you've got to be grateful for $500,000, and to turn, people don't realize as well, like it is possible to turn 5,000 into $1 million if the market conditions are right. The market conditions have to be right. Like, I mean, there's no line. I mean, I don't know how you found it, but last few weeks have been pretty tough.
Oh yeah, I mean, you look at which we had him on. If you can go to the podcast history, we had Roland Wolf on, and number one, I am not in any one iota discounting what Roland did back last year, but you have to admit, I think, and I'm sure he would admit, that he had a very friendly market. I mean, 2016, late 2016, 2017 was incredible, long and short. I mean, it was like, I mean, not, I'm doing the air quotes, but I mean, everybody made money in 2017 almost. So.
No, but it's so true. I mean, and for me, I remember having my first green months. I was green pretty much September, October, November, December. So that close, it's almost like the market makes it easier. It's like if you're playing a computer game, if you're on easy mode, it was like the market was in easy mode. That's
a good analogy, Phil.
And I can win in easy mode. I can win in easy mode, but I cannot win in hard mode.
We might have another Steven Johnson T-shirt. That's actually a very good analogy, because just like the video game in easy mode, I mean, you still have to know how to play. I mean, if I've never played this game and you hand me the controller, it doesn't matter if it's in easy mode. I'm still going to fail. But if you've got basic knowledge, if you've done some trading, you can do pretty well in easy mode. But just like as Phil mentioned, once the market kind of pivoted back to hard mode, he got humbled to a certain extent, for sure.
And it's hard. I mean, and Phil, this one of my favorite quotes. I think it comes from Phil next, and it's something that will stay with me for a while. But I think he goes on to say this next. He had to be in a trade. He was like, I had to, and I bet you it was because the market was so good, the market was hot. He was in the habit of jumping in trades and everything working. And I was the same. I'd be like making 4 trades by 10 o'clock, and I'd be green 4 to 5, because you just know, you see the patterns. Right. Spike, the spike stocks that have got a history of failing, spike and fail on crap news. And you think, right, he has another one. But then all of a sudden, when there's none, you're like, well, shall I just jump in this? Shall I just jump in that? We may as well play the clip. I think he talks about it in the next one. And this was the highlight of the whole thing for me.
You know, when I was in college, to be honest, I wasn't the best student. And, I got grades good enough just to kind of squeak by. And in every spare minute I had, I was studying the market. I mean, I really was. I had stock screeners out there, and I was studying every big winner on a weekly basis, monthly basis, quarterly basis, yearly basis. I was just looking at those patterns over and over and over again until I was, blue in the face. So it was surreal that I had the money, but at the same time, I had spent thousands and thousands of hours. So the same time of it being surreal, it was kind of like, finally it's clicking, you know what I mean? So finally it was making sense.
Yeah, that's not quite the right clip where he says he can't get out of every trade, but it's still a super important point. It's something that we probably all don't do enough, is keep a track record of stocks and identify patterns.
Yeah, and the study habits. A lot of the traders we've up to this point, we've talked about the fact that hours. I think about Roland driving around the block for an hour while he's watching video lessons. I think about Ducks doing 25,000 spreadsheets. I think about myself back when I had a business, I had kids. I was still getting up at 5 a.m. so that I could spend 3 or 4 hours studying the markets, looking at patterns, just like Phil said, looking at those big percent gainers. I have looked at the biggest percent gainers every day. I don't care if I was on vacation or what. For 10 plus years, I have looked at the top percent gainers and decided, is this a buy? Is this a long? Looking at the charts every day for 10 years. He's been doing it every day for close to 20 years, and that's why he's one of the best.
Yeah, no, and that's the problem. Like when the market is easy, like I know it's just going from personal experience. When the market was easy, I started thinking, I don't need to track these stocks anymore. I just know what I'm doing. I'm dead good at it. Got a good market intuition of it. And then you come to realize that you need to be putting hours and hours and hours in. And I was just coming to the point I was thinking I need to start getting up a few hours early every morning just to make sure I've got enough time to track all of these patterns.
Well, and I think that's when the market does turn, and when things aren't working, that's when you study even more. I think a lot of new traders, momentum goes both ways, positive momentum as well as negative momentum. And yeah, when you're in, I'm gonna keep using your analogy, when you're in easy mode, that's when you do overtrade and you trade like crazy. But then, because you want to keep that momentum going. But when things start shifting and you're like red day, that's when you need to say, wait a minute, I need to back off. Now, what I see so often is the exact opposite. Guys and gals, they get 3-4 red days, they get a red week, they start trying harder, they start trading more, they start branching out. Now all of a sudden they got a red couple weeks, and they're doing stuff. They're trading options. They're trading futures. Right now right now the momentum stocks are a little quiet. These guys are trading these VIX ETFs and stuff. It's like, just back off and chill and wait and study.
Yeah, no, I mean, I've always thought if I ever have a couple of red weeks again, I need to create some sort of some exercise where I have a sanity check, where you just start looking at every stock that is up 80%, every stock that's up a couple of green days in a row, and just watch what it does over a 3, 4, 5 day period to see what you're missing, see where you can find a new edge because something's clearly not working anymore. Because people don't get you're like, well, what? I really just have to look at charts all day, and if you don't know what you're looking for, it is hard. It's hard to know what you're meant to be looking for. It's for me, when I first started trading, I was like, I'll just track every 10%, every stock up over 10%. You don't know what you're looking for, and that makes it difficult. I don't know about you, but when I look, I think I'll track this pattern, I'll track this pattern, I'll track this pattern, and then you start seeing where you can have an edge. But it is hard when you're new. I'm just trying to think, how do I help new people? Do you know what I mean?
And I think that
how do you communicate it?
Well, I think, we talk about it all the time, is having that long-term mindset and just know that you have to get that pattern recognition. I was talking to a StocksToTrade Pro member the other day, and he's like, man, it's starting to click to me because now when I see these terrible long-term charts like Dare was the short of today, he's like, I start going black because he's heard me see these long-term downtrending charts, and I do that all the time. I'm always like, black, there's got to be something better to trade. And so he's a new trader. He's new, but he's recognizing charts that he doesn't want to trade. I mean, there's 16,000 publicly traded stocks. Part of the process is getting rid of all the freaking chaff so that you can focus on the actual wheat.
No, and I totally agree. But the hardest thing once you learn how to pick and not pick a stock is just learning how to not trade at all when there's nothing good. And for Phil, the funny thing with Phil, and it's coming up in this next segment, is he talks about he was trying to find new patterns and trying to be more aggressive, but he actually found he grew his account much more by just cutting losses, which is another thing I definitely have a problem with. but let's see what he has to say in the clip.
Finally it was making sense. Make 50 grand here, 80 grand here, 100 grand here, 20 grand here. And at the same time, I would see all these big losses, lose 40 grand, lose 60 grand, lose 20 grand, lose 75,000. And I thought, well, hell, what if I just try to not even make more money, not even increase my position size, not take on any more risk? What if I just try my best to eliminate all of these losing trades that I have in there, all these losing setups? So again, I went back and I studied all of my trades, and I kind of learned that a lot of these losing setups, either they just weren't the top-notch setups out there, but I was still putting on, maybe full position size where I just shouldn't do that. Or I was just letting losses get a little too big. I was letting those losses grow a little bit more than I should. So, the very next year I said, well, hell, let me try to just cut my losses fast.
Just brilliant. But yeah, you can take it away. Brilliant.
Well,
yeah. Brilliant.
I really like
Brilliant.
The way I really like the way he put it, in that, he recognized that, and we talk about this all the time. The number one rule is cut losses early, cut losses early, cut losses early. Well, the problem is, excuse me, especially as a new trader, when you're losing 2/3 of the time, people don't want to continue cutting those losses early. And, every now and then you get rewarded. You overstay in a trade. You wake up the next day, there's news. You make $1,000 and you're like, oh, okay. I didn't cut the loss. I didn't cut it this time, and it worked. So now I'm not going to cut it next time. But that rule, you can never recite it enough. People, get annoyed by people saying cut losses early, and they're like, there's more to it than that. Well, Phil basically doubled his profitability. Well, I don't know if it was double. He majorly increased his profitability just by cutting his losses to smaller.
Yeah, and the major thing for me was he said, what I started thinking about is the setups that I traded. I started thinking that I can't even trade some of these setups because I can only trade the best versions of my favorite pattern, because some of these other versions aren't quite good enough, or I should trade them with less size. And when you look at a beginner who's trading 5-6 different setups in every variation of it, it is no surprise whatsoever that they lose 90% of the time, 80% of the time.
And they're putting on the same size in every position.
Yeah, and obviously the pros are thinking, I'm not just going to trade my setup, but I'm only going to trade the best versions of this setup as well. And they've got all that experience. And you think, well, no wonder. No wonder this guy like Phil, he's cleaning up and the newbies are not. But this is why you've got to trade so much, much, much less while you're learning. I guess I just try and focus on one pattern. I know it's hard, but
yeah, and we've talked about that in the pattern day trader episode a couple weeks ago. When you're new, your goal is go back to Phil. I mean, he was burning through these $3,000-$4,000 accounts, but he wanted to learn this. And when you're new, when you're small, your goal is not to get rich. Your goal is to get green trades, whether they be $5, $50, $500, whatever that number is, and get to the point where you can consistently repeat that. If you can't consistently, if you can't finish a week green, then excuse my language, don't put any fucking size on, okay? If you can't finish a week green, you should be 100 shares, 50 shares until you can get to Friday night. And I don't care what that number is. I literally don't care after commissions if it's a $5 number on Friday night. But if you can't get through the week with a green week, it's 10 shares, 50 shares until you get to the point where you're like, okay, I can do this consistently.
Yeah, no, I absolutely agree. Absolutely agree. But I'd almost just go as far as saying just paper trade every other setup to figure out a setup. And if you've got one setup that you like, trade it with cash over and over and over and over and over and perfect it.
Yep.
And I mean, honestly, people are going to be like, why should I listen to this person? And I'll be like, trust us, I may not know that much about trading, but I do know this. You've got to perfect one setup. I've learned it. And had I have stuck to my own rules of just trading one setup, I would have been running away with a lot more money than I've got now. But so I'm just trying to help people where I've went wrong. That's it.
Well, and remember, where you are, you might be a little older than Phil, but older than Phil at the time. He was in college, but journey-wise, you're in the same point. I mean, he said it took him 3 years of college before he got anywhere. You're 14 months into this.
Yeah, no, I agree. And this next point that he brings up, I mean, God, it's such a good interview when I think back at it. The next point he makes is about a lot of short sellers. If you do this, if you're long, I think you're insane. If you add to a loser when you're long, I think you're insane, because I don't know anyone who adds to losers and it works. Long. Shorts, I get sometimes people build into a position because it's already so overextended. It's a little bit more logical. You totally don't agree, right? All right. Since you're in this interview, I've decided I'll average up on a short once only, because what Phil says is what he's doing. He's just average up when I never work for him. We'll play the clip. Let's listen to what he says, and then we'll get into it.
HMNY, I shorted it was around maybe 850 or so, and I had about 100,000 shares short, and I cut that loss, maybe high nines, and I took a loss on that. But, a lot of these I'm taking, now that one was not a paper cut loss, but a lot of these I'm taking small, what I call paper cut losses on the way up. I mean, timing is very, very difficult because even if you have a stock like Riot, RIOT, that went up to 46, if traders were to go back and look at that final day where it put up that final candle up to $46, I mean, those intraday swings are incredibly difficult. I mean, there are head fakes galore. It is incredibly difficult to try to time that correctly. Usually what I do, again, is I'm taking paper cut losses on the upside. I'm starting with a starter size, whether it's 5,000 shares, 10,000 shares, whatever it is. And, I'm hoping that I have, maybe hit the top right there and it's going to go down. If it goes down, I'm going to add. If something goes up or breaks through support, I'm getting out. I mean, I'm cutting that loss, sitting back, and I'm going to look for, again, a re-entry either later that day or the next day or the following day or whatever that is. But I'm not a trader that's going to start a short and look to add higher. I just don't do that. I did that in my younger days, but again, going back to the thought process of keeping your losses small, that just does not work, of shorting and adding higher. I would rather short, look for a breakdown, look for a failed bounce, short that, and I want to keep adding, when I'm in the money. I don't want to add against me. We've all seen a stock like Dries that was last year, that was in 2016, go from $15 up to $150. So adding to a losing position is not something that I ever really want to do.
Yep. I'm like eating words.
Yeah, my thing is, especially, if you've got, number one, if you've got the experience, well, if you're some 20-year trader, you're probably not listening to the Steady Trade podcast. So, but if you've been trading for 20 years and you got a $5 million account, well, brother, go ahead and add when the stock goes against you. But if you're a new trader, if you have a small account and you're adding to a short that is not working, I can tell you with high certainty, it will almost never, ever, ever work out. Because if you're adding, it means the idea, it means that Phil mentions timing. That's the thing. People look at these charts. They look at the Dries. They look at the KBIOs. They look at the cafes that he mentioned, the HMNYs, all these stocks that go parabolic and then drop. And they don't think about, they see the big spike in the drop and they think, oh, that was an easy short, but they don't think about entry. And if these things are going against you, you don't know if it's the next Dries or the next HMNY. And if you've got a small account and you're adding to a losing short, sorry, but prepare to join the 90% because that's where you're headed.
Yeah, no, and it's true. And the one thing that you said to me, and it only sunk in after I took a big loss, was you're like, oh well, you've just risked $1,000 to make $200. And I'm like, yeah, but the stock always comes down, and I just made $200, and I make $200 every time, and that adds up to $1,000. But what you don't realize is that one day it's not going to be $1,000; it's going to be $5,000, and you're going to be like, shit. You learn bad lessons, and eventually it catches up with you. Unfortunately,
that's the saying, and I might butcher the saying, but it's like it works great until it doesn't, and what you were doing worked great. 200 risk, you're down 1,000, you're hitting me on WhatsApp and you're like, I'm down $1,000. And I'm like, oh God. And then an hour later, you're like, I made 200. And I'm like, oh man, and it's great. It's great until the one time it doesn't. And then all those $200 gains, poof, they're all gone because you take the 5K loss. And a 5K loss is a lot of $200 gains.
Yeah, no, it's stupid because ultimately what happened is I made 2,500, 3,000, and then lost 5,000. So it just didn't work at all. I just lost 2,000 of my own money. And you could argue I could have cut that on the 1,000, but it's better to just not give yourself that false sense of security and not give you that false realization, and just really think, well, how much am I actually going to risk, and how much I'm actually going to make, and do your risk rewards properly. Sometimes I think no one will listen because I never listened. Hopefully some people will listen, and or when it goes wrong, they'll be like, "Ari, they said it before and they were right."
Yeah,
I don't know why people don't listen though.
Especially when you're when you're early, when it's day one, it's day two, it's the morning of day one, day two, and if you're short and you're starting to add to something that's not working, and it's day one, day two, whoo, brother, you might.
It's a few days.
That's your specialty. Go ahead and talk about that. You've been there. You put yourself in that position every day.
Nah, the thing I think I actually did for a few months, but what I've learned is just you've got to short the worst of the worst of the worst. So if they don't fail straight away, then something's definitely wrong and you've got to get out. Don't short anything. Don't short anything that's half measure. And think, well, it should go down, but it's not going down, and it might go down eventually because you don't have a good read on it. You need absolute confidence, like the likes of CLSN. CLSN, every time it gaps up, it has big red DR. LMFA, whenever it spikes big, it always comes down that day. Like these, once you catch the backside, then you can have certainty that if they're running, something's manipulated, something's wrong, you need to get out. These are the types of good shorts that you can go bigger on. If you compromise in your setup, like Phil said earlier, if you start trading half setups, then you don't really know where you are. So if it does go up, you don't, like, you just lost, I think.
Yeah, like your trade again today. We're recording on February 12th. Dare, again, this is the stock I like to pick on, the female Viagra. I mean, this chart, disaster. The stock spiked within a penny of resistance. I mean, the long-term resistance was at 360 on the yearly chart. The stock spiked to $3.59. And then, I mean, it went to a low of the day and it's still fading. I mean, it's $1 off of its highs and it's still fading into the close,
Crazy
so
risk reward.
Yeah, that one. But then the beauty of Dare is when you're looking at that resistance at 360, as you just mentioned, I mean, you made a good point. If that thing breaks 360 and keeps going, then something's up. And that's where you're like, that's why you use the chart, and you can make fun of female Viagra all day long. But when that thing breaks year resistance on high volume and it's still going, you need to get out or good luck.
Yeah, and it was the same with AFMD. Well, I think it was AFMD was the stupid 5,000 loss I took. It was a really sketchy stock. But so when it's holding higher days and pushing higher days and it's not coming down, there's something seriously wrong. Or there's something going on and you need to get out. It's the same thing. But there's a final tip from Phil that I really liked. It's like a longer term preparation tip, and it gives newbies a kind of an idea of how to study, and I think it's really beneficial.
Well, again, something I've done since I've started trading. I've gotten a little lazy because I have 2 kids, but after trading for 10, 12 years, what I do is I try to, at the end of every single year, go back and print out a chart of that year's biggest winners. Stocks that have gone from 5 to 50 or 5 to 15, 3 to 30, whatever it is. And I print out every chart, and every single one of these falls right back to earth. I mean, almost every single one of these, after hitting a peak, is going to fall, 40, 50, 60, maybe 70%. So I print out all of these charts and I keep them handy so I can go back and I can, maybe compare one move to another move. And I call them pockets of air because I honestly, I don't remember one of these ever really holding up long term. I mean, they're all gonna crack.
I just think that was obviously it fits well with his strategy of shorting parabolic moves, which are hyped up. But I really like the approach of just having a catalog of all the biggest movers, long or short.
Yeah, and I know a lot of guys, you did it for a while, that put those charts on their wall. I don't have it anymore, but I used to have a 3-ring binder. Same thing. I mean, you kind of get to the point where you're busy with other things and, and you kind of know what you're looking for 10 years in. But like he's saying, back in the day, he printed them out. And I had the same thing. I had a 3-ring binder, and I would compare. I'd be like, hey, this is just like that one. And then you start looking for that topping action, especially on the short side. And you start recognizing these things. And you think back, okay, what was the news on this stock? I mean, a lot of these stocks end up being good shorts multiple times, because you'll go back and look. Oh, last time it spiked, it failed. So they definitely repeat for sure.
Did you see there's a pump? Do you see the pump and dump? Michael Good's playing it now. Played at UMFG. Have you seen that?
Yeah. You know, it's
I banked on it.
Oh, did you really? Okay. Yep. You know,
$400, but still, it was good.
Yeah, for me, I'm still not. You know, I've been not necessarily focusing on those, because, you know, they're just so illiquid and stuff like that. But that niche still exists for sure.
When it falls 30%, like 1 minute. It's unbelievable. Yep. And Michael Good was saying he was playing it multiple times, and he shorted it multiple times in one of the challenge webinars. That's when it just came to light when you said the multiple opportunities. UMFG was an example. Yeah,
if you've got your charting up, UMFG is the ticker, and it almost looks like, if you look at the daily chart, it almost looks like it's fake, because it does 4 times in the last like 2 months. It's done the exact same thing. I mean, it walks up for 7 days, drops like 40%, walks up for like 7 days, drops 40%. It has done that 4 times in a row. So
it shouldn't be legal, but now going back to what Phil was saying about printing off the charts, I need to do that. I broke me printer by. You should never carry a printer on the side when it's got ink in, because ink falls everywhere. That's how I broke my printer. I need to get another one, but yeah, printing off the charts and putting them in sections, or even just having, like what he was saying, to have every stock. When I read this, I started creating folders on a laptop. I was like, I'm tracking every big runner for the rest of this year.
And that was another great, another simple strategy. You know, again, I know pretty much anymore, nobody has a printer anymore, but another great tip would be, I use Evernote a lot, or you could use PowerNote or PowerPoint or Keynote, and you can just drag those charts into a presentation, and you could have a presentation that says junky runners, and you can just drop those charts in there, and you could flip right through them with your left-right arrows and archive them that way. And then you don't have to print them out and put them all over your wall.
So here's a tip for all of the listeners. Here's some homework to end the podcast, I guess. Do what Phil does. Do what Phil does. And any stock that runs big, print every single one of them out, save every single one of them, put them all side by side, or flip them on a PowerPoint, and just be like, is there any kind of correlation on the daily chart? And then I'm sure things will start clicking. You'll start feeling like you're a bit like Neo from the Matrix. You'll start seeing the patterns. It's kind of true, though. Do you not think? It's kind of true.
Oh, totally. So, yeah, what I would like to actually, we've got multiple homework assignments for you. So, number 1, he doesn't tweet much, but if you're a day trader, you should be on Twitter, and you should be following Phil. When he doesn't tweet much, but when he does, it's good stuff. I know I get into these rants. I get into these rants on Twitter a lot about these overly vocal short sellers that tweet 500 times a day. That is not Phil. I mean, if he tweets something, it's actionable, it's good information, it's worthwhile. So he is at Ozark Trades, Ozark like the mountains. He's in Missouri. And then make sure it's in the show notes. Read his twit longer, his month or his year in review. That'll be in the link below. It'll take you 5 minutes to read, but it's great stuff. And then also would like to thank Chat with Traders for interviewing Phil. For sure, go to chatwithtraders.com and check out Phil's interview. I think Aaron's got 150 plus episodes of Chat with Traders. A lot of it, if you're a new trader, if you're an intermediate trader, some of it may be a little over your head. You don't have to listen to every episode. If it's some quant black box algorithm trading guy, maybe you don't listen to him, but there's a lot of great penny stock traders that Aaron has had on there.
Yeah, no, and absolutely. And thank you, Tim, for bringing Phil to my ears. I will sleep a lot better. Just knowing it helps so much knowing other traders' journeys, because it puts yours into perspective, and it makes you realize a lot of things that make the journey that is a difficult one feel a little easier.
Well, and that's why we actually kind of I moved the schedule around, because we've in recent episodes we've talked about some of Steven's struggles, and I never knew, again, I know Phil, I consider him a friend, but I never knew the history of his college years. And when I was listening to that podcast, I'm like, geez, 2 years in, he's struggling. He's one of the best. In 2018, he might be the best penny stock trader, but 2 years in, he's blowing up. He's struggling. He's going to work at his dad's hardware store because he keeps blowing up accounts. And I'm like, man, this is something Steven needs to hear, and probably a lot of our listeners need to hear.
No, super, 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 super great content. I'm not going to lie. I was thinking I'm really tired and I've got to listen to this thing before the podcast. And I was sitting lying in bed thinking this is actually brilliant. This is actually brilliant. So I really loved it. Thank you.
All right. Well, thanks again for listening to the Steady Trade podcast. Make sure to check us out at SteadyTrade.com. We have a submit your audio button. Make sure to check that out and leave us, please give us a question. You can record your audio, you can record your video, or you can just send us text. We are here for you guys. We want to make this podcast the most valuable and hopefully entertaining as can be for you guys. So send us your audio, send us your questions. Please leave us a review on iTunes, comment on YouTube, subscribe on YouTube, and comment on the blog. Tell us what you want to hear. Tell us what you like. Tell us what you don't like. We want to get better. And again, thank you to Phil. Follow him at Ozark Trades. And thank you to Aaron. Check him out at chatwithtraders.com.
Hi, this is Aaron, aka Double A Ron from New York City. And I like to go outside and find a stray dog, preferably an aggressive breed like a pit bull or a Rottweiler. Then I get real close, stare it down eye to eye until it starts to chase me. Then I run. That's right, I run while listening to Steven and Tim on the Steady Trade podcast. You can register to win real actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did, and this is how we say goodbye in New York City.